Welcome to the deep dive. We had a ton of you ask us to just cut through all the noise and give you a pure, unvarnished look at the technical reality behind the stock ticker LAZR.
Yep.
So we've taken your sources, this massive stack of technical indicators, trend analysis, all of it, and we've distilled it down into one single mission.
And that is to dissect the underlying forces, right? Separate the noise from the actual signal and figure out exactly where the technical pressure is building.
Exactly.
And look, technical analysis, it's really the language of market sentiment. And when we aggregate all the data you send over, the picture is, well, it's immediate and it's very clear.
So you've crunched the numbers into that single metric we always use.
We have. The overall technical score for LAZR, it lands squarely at 5.41.
5.41. And as anyone who follows our methodology knows, that score places this stock firmly, and I mean firmly, in the strong bearish category.
Oh, absolutely. Strong bearish. That's the consensus based on the history, the structure of the chart.
But that's not the whole story, is it?
Not at all. And this is where the true deep dive really starts, because while the overall technical structure is, overwhelmingly negative, the sources contain this fascinating and, I think, critical contradiction.
Okay.
It's a detail in the most recent price action that really suggests exhaustion has hit the market floor.
So the big question we need to answer today is whether that exhaustion is just a temporary glitch, a little blip, or if it's the start of something.
Yeah.
Something more, a genuine turning point.
Precisely.
Okay, so let's unpack this tension. We're going to walk you through the evidence, starting with the long-term trends that built this bearish score, and then drill right down to the immediate volatility that's causing that contradiction you mentioned.
It sounds good. And we always start with the foundation of any chart analysis, which is the simple moving averages, the SMAs.
Right. They smooth everything out to show us the real path over time.
Yeah.
They tell a historical story.
They do.
So what story are those long-term indicators telling for LAZR? Because, just looking at where the stock is trading relative to its history, it looks like a disaster film.
It's a story of structural decline. Let's look at the medium term first. The stock is trading well below its 20-day SMA, which is at about 73 cents.
It's okay.
And crucially, it's also trading far, far beneath the 50-day average, which is $1.23, and the 100-day average at $1.69.
So that's not just a downtrend. It's like three powerful layers all confirming the same thing.
Exactly. It confirms the medium-term movement is overwhelmingly negative.
And I'm guessing when we stretch that timeline out to the long view, the severity only gets worse.
It's compounded, yes. The price is significantly beneath the 200-day SMA, which sits at $1.55.
Yeah.
And when you see a stock trading this far below its 200-day, it confirms an entrenched, severe, and frankly, very difficult to reverse long-term downtrend.
Those averages, they essentially act as resistance walls, don't they? And the price is just nowhere near even challenging them.
Not even close. The only potential flicker of uncertainty here is in the immediate 5-day window.
Oh, interesting. What's that?
The price is just slightly above the 5-day SMA, which is around 28 cents, but it's still below the 10-day SMA at about 59 cents.
So locally, there's no clear sprint direction, but structurally, the path is, well, it's crystal clear. This thing has been collapsing for months.
That's the key takeaway from the SMAs. They establish the strong downward direction. But now we need to move beyond just direction and talk about the conviction behind that movement, how much power is actually driving this decline.
And this is where the average directional index, the ADX, comes in. For those less familiar, ADX measures the strength of a trend. Doesn't matter if it's up or down. And our reading came in at an incredible number, 51.57.
That reading is profoundly significant. An ADX reading above 25 signals a strong trend. A reading above 50?
That's extremely rare.
It's extremely rare. It signifies almost universal market conviction. Tremendous power. It tells us the big players are in near unanimous agreement on the direction. It's moving down with this exceptional, almost mechanical force.
And looking at the components of the ADX, the sources leave zero doubt about which way that force is pushing.
Precisely. We check the relationship between the negative directional indicator, the neg DI, and the positive, the plus DI. And the negative reading is far, far higher.
So it confirms this high-powered, highly convicted trend is definitively a downtrend.
Strongly a downtrend. To summarize this first part, we've established deep structural damage, and we've confirmed its exceptional force using the long-term averages and the ADX.
Okay, so we know the trend is incredibly powerful. There's a high degree of conviction. So the logical next question is, how much gas is left in the tank? Are we seeing signs of seller exhaustion? I guess brings us right back to that contradiction you mentioned at the start.
That is the core tension of this chart right now. The trend is powerful, but the sheer speed of the decline has led the stock to register these classic signs of being statistically overextended.
Right, the oversold condition. Let's look at the two most famous indicators for that. The relative strength index and the stochastic oscillator. What are they telling us?
They both scream oversold. The RSI, which measures the speed and change of price movements, is sitting deep in exhaustion territory at 27.47.
And anything below 30 is the classic signal, right?
Consistently below 30 suggests the recent selling pressure has been excessive and a statistical bounce is imminent. And the stochastic oscillator reinforces this. It's also deep in the oversold zone.
So the textbook says if a stock is this oversold, a short-term relief rally is statistically probable, simply because the asset has fallen too far, too fast relative to its own history.
That's the statistical reality of it, yeah. The market has been so aggressively pessimistic over the last couple of weeks that a mechanical statistical correction is almost guaranteed, regardless of the fundamentals.
But here's the thing. If the consensus score is strong bearish, why should you, the listener, trust the oversold RSI at all? I mean, doesn't the overwhelming power of the ADX at 51.57 reading, doesn't it just neutralize any simple bounce signal?
That is exactly the right question to be asking, and that's why we have to bring in the MACD, the moving average convergence divergence. It gives us insight into momentum and, crucially, acceleration.
And this is where the contradiction really comes into focus.
It crystallizes here, yes.
So what does the MACD tell us about the velocity of this decline?
In direct contrast to the RSI signaling exhaustion, the MACD confirms the strong underlying bearish momentum is still accelerating.
Still accelerating, wow.
It's highly negative at minus 0.083, and critically, it is trading below its signal line. A negative MACD below its signal line tells you that the bearish velocity is actually increasing, not slowing down.
So we have two highly respected indicators sending completely opposing messages. The RSI says the stock is exhausted, ready for a break, but the MACD says the engine is actually hitting the gas harder. This is the tension that traps traders.
Exactly. And to settle that, to break that tie, we have to look at the real evidence of participation, money flow. If big investors were truly buying this dip based on the oversold RSI, we would see it in the volume and flow indicators.
And the sources clarify that the trading volume, while it has been high recently, it confirms selling pressure, not buying.
Yes. The on-balance volume, or OBV, is in a steep decline. This means the higher volumes we've seen are predominantly associated with selling, with distribution.
Okay.
And then the money flow index, the MFI, which is a bit like RSI, but it includes volume, is sitting at 20.89.
So again, just like the RSI, the MFI is deep in that oversold territory, confirming the money is just relentlessly flowing out of the stock.
So if you connect the dots, we have strong evidence that the underlying trend and the real flow of institutional money are still aggressively bearish, even as the price itself hits these statistical exhaustion levels.
Okay, let's shift focus to risk management. Given this incredibly strong downtrend, let's assess the volatility and where the critical price walls are, the support and resistance levels.
Volatility is essential for quantifying risk. And yeah, this chart confirms a high-risk trading environment. We can look at the average true range, or ATR.
And the ATR is 0.043. What's the implication of that number?
Well, relative to the stock's current price, 0.043 is high. It signals significant volatility.
And high volatility means wider, choppier movements in a short time frame, which it drastically increases the risk for any short-term investor.
Absolutely. And you can see that volatility reflected in the Bollinger Bands. They define the statistically expected trading range, but the price is currently outside of it.
It's trading below the lower band, right?
Correct. Below the lower Bollinger Band, which is at about 35 cents. This is a classic strong bearish signal. The price has been pushed outside its expected deviation to the downside. And because the ATR is high, the bands themselves are wide, confirming this environment of massive, unpredictable swings.
So now for the most critical point for anyone watching this stock, the floor and the ceiling. Given how severe this drop has been, we need to know where the market absolutely has to hold.
And the 52-week trading range it's truly immense, from 25 cents all the way up to $9.90.
And the stock is positioned where in that range?
At less than 1% of that range. It is sitting right at the absolute bottom of its entire annual trading history.
That makes the immediate support level the single most important factor right now.
It is. The critical immediate support level is that 52-week low of 25 cents. This is a major psychological and technical floor.
And what happens if it breaks?
If the stock, despite being so statistically oversold, breaches that 25-cent low, it enters completely uncharted territory from a 52-week perspective, and that often triggers fresh waves of forced selling and fear-based distribution.
So for investors who are looking for any kind of reversal, the immediate resistance levels are going to act like concrete walls that have to be scaled.
They absolutely have to clear the 10-day SMA at 59 cents, and even more critically, the 20-day SMA at 73 cents. Those are walls of overhead supply.
Meaning people who bought there will just sell to break even if it gets back up there.
That's the high probability, yes.
Okay, let's synthesize everything. We have an overall score of strong bearish. It's driven by that insane ADX of over 51, negative money flow, high volatility. But we teased a vital recent data point that challenges the immediate outlook.
That's the twist we opened with. While the structural picture is severely negative, the specific daily return captured in your source material is a significant positive return of 9.06%.
A nearly 10% jump against a chart showing unrelenting bearish structural damage. That is a huge singular move.
And this specific, large positive daily return is the likely manifestation of those oversold signals, the RSI and stochastic exhaustion finally playing out.
Ah, I see.
The market sold the asset so aggressively that it triggered a rapid mechanical relief rally.
So connecting the dots, the selling pressure was so excessive that the market had a knee-jerk correction, and that's evidenced by that 9% jump. But is this just short covering? Or is it genuine institutional buying taking advantage of the deep oversold signal?
Based on the MACD and the MFI, we have to treat this jump as exhaustion, not enthusiasm. The technical outlook remains extremely bearish overall.
So the 9% bounce alone is not enough to negate the structural momentum.
Not nearly enough. While the recent price action indicates market pressure is exhausted, that ADX and MACD structure is still fully intact.
The analysis then concludes that the stock is in a strong, high-conviction downtrend, currently trading at severely oversold levels right at its 52-week floor.
And this leads directly to the core cautionary advice. Investors should be deeply, deeply cautious. You have to look for explicit confirmation of a true trend reversal like clearing a key SMA before considering a long position.
Until then, any positive bounce is just a momentary pause in an accelerating decline.
That's the data-driven conclusion.
Well, thank you for providing us with these incredibly detailed sources. I think this breakdown gives you crystal clarity on where the technical forces for LAZR are currently concentrated.
You have powerful downward momentum meeting statistical exhaustion right at the absolute floor. It's the highest tension chart structure you can possibly find.
So we've highlighted the critical takeaways. A strong bearish trend confirmed by that sky-high ADX of 51.57, a deep oversold condition with an RSI of 27.47, and that recent 9% daily return indicating a probable short-term bounce. The source material advises caution.
And waiting for confirmation, because the stock is currently fighting for its life at that 52-week low of 25 cents.
So the ultimate question remains. Short of the stock miraculously clearing that critical 20-day SMA at 73 cents, what single confirmation signal, maybe a clear divergence in the money flow index or a specific reversal pattern above 35 cents, what would truly validate a turnaround against this overwhelming downward force?
That's what you need to be watching for next.
Food for thought for your own research. That's all the time we have for this deep dive. Until next time.